The GPS DairyCAST features the high-value insights of the GPS Dairy Consulting team's trusted advisors and the owners and managers from the elite dairy farms they serve. These conversations deliver on the GPS Dairy Consulting promise to inspire change and grow leaders.
Welcome to the GPS DairyCAST. I'm Peggy Coffeen from the Up Level Dairy Podcast, serving as your host, and we're coming to you from the 2025 GPS Leaders Forum. In this conversation, we talk managing risk in dairy markets with a global view on protein needs from Ben Buckner from AgResource Company, along with GPS consultant Paul Dyk. All this and more today on the GPS DairyCAST.
Thank you for coming to Minnesota, being part of our Leaders Forum. Tell us a little bit about yourself. What do you do?
So agricultural economics exclusively, and just a little bit of background on AgResource. It's 35 years.
Yep.
Started the company, a fellow named Dan Bossy, only focused on market research and price forecasting. We do no trading, no brokerage. And so with that said, the business model is to get markets 12 months forward exactly right.
Wow.
Not always the case, but we do make an attempt 9 out of 10 years to get things in the future correct.
Tell me a little bit, who's your clients?
It is probably 85% U.S. producers.
Okay.
Whether it's beef operations, dairy operations, for the most part row crop,
Yep.
meat farmers.
It's December of 2025, and tell us a little bit about what you see in terms of U.S. economics. Where are we at? How are things doing?
Yeah, politics, especially now, have kept things fairly chaotic, but
Right.
we want to take a step back and
Right.
just look at sort of the scaffolding
Yep.
of how things work and how things look. I think we're kind of humming along economically, and that's
Yep.
probably the case in the U.S. and globally. We are concerned, I think, about stagnation in a lot of metrics. And I think you look at the way things are evolving, and the stock market's doing incredible.
Right, stock market's great.
401k's doing great, but I think our concern is putting that piece of the puzzle together with food demand. That is all we are
Right.
concerned about, is
Yep.
where we're going to eat more food, make more food disappear or less.
Yep.
So a lot of the capital expenditures, maybe the entirety of the world's available capital is going to technology, AI specifically.
Yep.
So our question is it able to go anywhere else? And what does that mean? So you're seeing things like stagnation in industrial output as a whole in the U.S. Unemployment, near full employment
Right.
in the U.S., but it's ticking up. Historically, we don't like to see that on a consistent basis. Looking at who has assets and who doesn't. So the bottom 50%, and this is not new, but
Yep.
it does seem to be getting worse in terms of the bottom 50% holding less wealth than the top 50%, and that gap's getting wider. So we put that together and we think about food consumption, what kinds of foods get consumed over the next year, 2 or 5 years, and I don't think there's going to be a lot of incredible growth. So to us, U.S. economic growth looks pretty unremarkable, and we are concerned about everything everyone's seen about layoffs, whether it's the private or public sector. So the question we've got is it going to be a banner year for the U.S. economy in 2026? And we think probably not.
I was thinking about a book that came out, somebody reviewing the crash of 1929, and I think about 2009 when the Great Recession, and I can't forget because we didn't see it coming. The prices in the dairy world, our milk prices were really good at the end of 2008. The predictions were, and then demand went down. What are the concerns about having some sort of event like that? They're always unpredictable, otherwise it wouldn't be a gray swan, right? Or black. Is there something in the forecast that would tell us that, hey, we're going to see a crash in the stock market, anything like that?
Yeah, if I knew that, I wouldn't be here. But I do think you bring up a good point. Something like that. Everyone's watching subprime loan activity, credit card payments, delinquencies, et cetera. So we're at least watching that to be prepared for something like 2009. And we don't see it that way. We just think that it's going to be difficult. I mean, does the AI sector pay off? And I don't think any of this is coming in sort of the short term.
Right.
The next 2 or 3 years, I think
Right.
that's going to be.
Whether we have an internet bubble in the AI industry?
Sure. Yeah, at some point, this money has got to find some kind of return, and I don't know if it's doing it just yet. And I think that, for the context here, economies shrink and expand.
Right.
So it's not terribly insightful to say something like the U.S. economy is going to start slowing down.
Right.
It's been now, as you mentioned,
It almost has to slow down sometime, right? It can't go on like this
it might be
forever.
healthy. 16 years was the last real non-pandemic related crash. And so it's just kind of part and parcel of the way things work. But it is, how do we get more people to work and more people to earn more money than they were is kind of our focus when we think about dairy food consumption. I think that's just going to be a challenge for the foreseeable future, I think.
Let's dip a little bit into ag world. Sitting here December of 2025, we see some milk prices that are kind of scary coming for 2026. What's happening in the dairy world in terms of supply, demand? Where are we at?
It's getting loose. And part of the cycle of agriculture, I think that is just it. We've produced a lot of milk globally. And to us, from a very high level, it is partially this issue of U.S. world economic growth,
right.
Food demand. Maybe we only see dairy consumption growth pretty normal, 1%, something like that. So unremarkable. But I think we're also worldwide just responding to $22, $26 cash milk. And I know that was now 18 months ago, but I think we've seen this kind of slow but steady evolution. We got the most cows being milked since 1993.
Yep.
I think that is a function of just high milk prices. Beef prices as well, retaining heifers,
right.
crosses, et cetera. And so people were making really strong margins, and that's coming home to roost now. We've solved yield issues, avian influenza. So now we're producing 3 and 4% more milk than we were last year. We've done that since about June of 2025.
Right.
And I think what's added to this, and we can all see and feel this.
Right.
This is not surprising. You look at Chicago Class 3 and what it's doing. We kind of take a step back and look at the rest of the world. This is happening in all of our competing markets. New Zealand, Europe, increasingly in Argentina. So everyone is producing
more milk
than they were a year ago. And I think more milk than we even thought. We knew that the cycle would change.
Yep.
Adding cows, maximizing yields, but it's been surprising to the point where we've got guidance from USDA, what New Zealand's going to produce for a calendar year. We're now way above that as of October. So it's really been surprising. And so you kind of put that together with thinking about big picture, let's say 18 months, 2 years ago, we were having to ration available dairy supplies. And now it's flipped on its head. So we're now looking for prices that build demand, slow or contract the U.S. herd. And this happens every 4 to 6 years. This is just kind of the cycle that we're in. So the question that we've got, what we are spending all of our time trying to figure out, is what's next? What changes this? What turns the market around?
Over the last 25 years, exports have become so much more important for the U.S. milk market. What's that been doing? What's been going on there?
Really, really well. Exports are doing incredibly. We've only got official numbers through the month of August. But even then, we've learned things like China left the U.S. dairy space in the peak of the trade war. So about April, May. Rhetoric was very, very intense. But they came back immediately after that.
They got 1 billion people.
Yeah. Where else, especially the summer of this year, where else were you going to find dairy products? So they imported a record amount of U.S. dairy goods. And so even since then, as far as we know through August, it's been pretty normal. So the trade war, I think, to the dairy space has been totally negligible. It has been totally immune from U.S. global trade policy, so that's a positive. And we're very competitive. I think because you see Class 3 and cheese and butter where it is, we are the cheapest origins for all this stuff on Earth, so we're making a lot of it disappear in the export market. So there is demand. There's a demand story. It's just that I think supply has crossed this threshold that we're still building inventories.
Yeah, I listen to you and I'm going, okay, we're probably, exports are doing really good. We have a lot of milk. Where's our improved milk price going to come from in the second? I'm hoping second half of 2026. Where will that come from? I guess contraction, but do we have room to contract? I mean, who's going to stop milking cows? That's my worry.
Yeah, I think that's a fair concern. It was easy-ish to see what happened in something like 2023, where you had the same phenomenon. We're starting to build production globally.
Yep.
We look at something.
More exports could still happen, right?
Sure, yeah. And in 2023, though, the global auction prices sliding. Then we stopped producing. Right back up, $25 cash milk. So I think we're waiting on the producer's response to this. And you bring up a good point. Who's going to stop milking cows?
In 20 years ago or 25 years ago, we had this 60% of the dairies that were, let's say, a little bit smaller or medium-sized, and a lot of them did disappear. But now the dairies that are left, there's not a lot of small ones left, and small means 1,000 cows right now. I'm having a hard time seeing them exiting very quickly. Where is the contraction going to be? That's a tough part for me to see. It's going to be harder and harder to contract.
Yeah, and that's, I think, our sole focus at AgResource, at least for the next 6 months, is determining what is break even.
Right.
Even anecdotally, using Class 3 futures, is it 14? Is it 13?
Yep.
Is that a place we have to go? And I think, too, the beef market, which is now exposed to politics, but it had been incredibly volatile. I don't think we've solved that issue yet. Even with the dairy farmers' participation in beef crosses.
Right.
So I think that revenue is going to offset weak milk prices, probably for calendar year 2026. And it's something we like to do. We kind of recommend keeping up with the beef crosses. I do think we've got to mathematically get rid of something like 100,000 milk cows to find some kind of balance.
And maybe with the beef prices where they are, the beef market is, that will happen. Maybe guys will just stop milking 1% cows, just get rid of the lower end. My numbers that I see with my clients, I think it's about $2 a hundredweight for a lot of guys, what the beef is contributing over and beyond what it used to. It's a big number. It's not like a little number like, 10 cents a hundredweight. No, it's like a buck or two. Yeah. So cost of production, it may be the same, but the revenue coming in has been so much higher. It's floating our dairies in 2025, for sure. Beef has really been where it's at. So milk prices, we'll see what happens. Tell me a little bit about beans and corn.
It's similar to us, and I think this is the silver lining to this kind of doom and gloom milk price outlook, at least, is feed costs are going to be pretty cheap.
As long as you're not a grain farmer.
As long as you're not a grain farmer. Right. And in fact, I think the dairy outlook relatively is better than the row crop farmers outlook. And it's really just comes down, we produced a record amount of stuff globally. It probably happens again in the southern hemisphere over the next 3 or 4 months. So that's the starting point, is there's no shortage of feed supplies, no shortage of corn and soybeans. Don't have any weather issues to speak of in South America. We highlight that because the South American growing season for Brazil especially is not long yet. We've only got about 4 weeks, 5 weeks of crop critical weather for the most part, and don't see anything. And they're going to produce probably more soybeans. We'll, of course, debate the nuance of Brazilians' crop production, but it's going to be big. How big is big, I think, is the question. So there won't be any shortage of supplies, corn and soybeans. We are contending, of course, with some politics, and that being exclusively is China buying U.S. soybeans. What does U.S. trade policy look like over the next year?
GPS Dairy Consulting is proud to highlight their sister company, AgReSource Solutions. AGS is a team of financial consultants with strong dairy backgrounds who represent and work for the best interests of dairy producers. The AGS team works independently for the dairy producer to guide them through their business's financial position and planning for their continued and future success. Partial budgeting and asset management modeling, along with key performance indicator scorecards, are the future of dairy financial tracking and management, and AGS leads the industry in these service offerings. AgReSource Solutions provides leadership, experience, and solutions to ensure their clients' financial success. Learn more at agrisosolutions.com.
I looked at your presentation and, the amount of beans that Argentina is buying. There's a lot of talk about decoupling of China and the U.S. on the bean side. Is that happening? I hear the tariff stuff and China's going to buy some more beans. I think. Has there been any beans that have shipped at this point?
That's a hot debate in the analyst community this week. I think there's like 6 or 8 vessels that are scheduled to be loaded.
So
I think it's going to get shipped, but is the 12 million tons? This agreement or whatever it was that was implemented, I don't think it's binding, but is that enough?
Is that more than it used to be?
It's a lot less.
A lot less than it used to be.
Yeah. The deadline, as far as we know, or what's been communicated, the end of February.
Okay.
And so if you then step back, look at Chinese buying as a whole from, say, September to the end of February, it's a lot less than they normally do. And then the 25 million ton pledge per year thereafter is also would be the lowest since 2019 on an annual basis. But I think that's not really what the issue is in soybeans. It's China and the U.S. and what do they do in this battle for future economic dominance. They could buy 50 million tons of soybeans, no problem.
Of course.
We don't think they're going to do that, but that's, I think, what's keeping the market on edge and the chaos you've seen in markets like protein meal and soybeans specifically.
Bean meal, of course, being the derivative of soybean, we've increased processing capacity. as a nutritionist, we've been waiting for about 3 years the price to really drop, and it did this year. Where's the bean meal going to go?
So that is a market to us that, of course, in politics are important.
Right.
Second, maybe close second behind weather in determining price discovery. But that's the protein meal market, the soybean meal market especially. To us, kind of third grade arithmetic. I don't think that market can go up for any length of time.
There's this many tons, and if it's not going anywhere, they have to get rid of it.
It has to be made to disappear somehow or another. And similar to milk, it's not just happening here, but it's happening in Brazil, crushes up.
Yep.
Argentina, probably famous last words, but will avoid a weather issue, so they're going to have more meal. And so I think we will make a record amount of meal disappear in the export market, but at what price? That's the question. So it's got to be lower for a lasting period of time.
I remember about 20 years ago, we had a lot of ethanol plants come online, and a lot of distillers was coming online, and we heard, well, we'll be able to get distillers for $80 a ton. Well, not really, because at some point they can throw it in a container, ship it somewhere on a return empty container. It's never going to go below a certain level, I think, because at some point Asia's going to take it. I mean, the bean meal. I don't know what the lower end is though for bean meal. I mean, I just don't know where that bottom, how far it can go.
Yeah, and I guess the last decade, and we've been through all kinds of markets in the soy complex and in protein meals.
Yep.
We haven't proven that we can drop soybean meal below something like $250 a ton. So that probably is your low target. You think this is philosophical, but does it have value as a fuel if you just burn it at some point? Maybe that price, something like that. But I think like milk, we don't see an end to this protein meal production cycle. It's everything from, we'll see how the EPA's mandate evolves and tax credits. That's all very complicated, but in the worst case scenario, I think we're going to use a record amount of soybean oil. We're going to have to crush record amounts of soybean. So that production's coming to us in the U.S., meal production. Same thing in South America. Even things like the European Union had planned on this deforestation regulation, and that ultimately Europe wouldn't buy soybean meal from Brazil or maybe Southeast Asia, or anything that they can't prove they haven't cut down old growth rainforest. So that's been delayed a year. So at least for 2026, Europe will have access to South American soybean meal. So it's really hard for us to see an end to production growth, protein meal, and an end to competition. Again, like how do you get rid of it, I think is the big question in soybean meal. So
it has to go somewhere.
It has to go somewhere. The market will ebb and flow, but I think higher prices will encourage production, slow demand. Those are the opposite signals we think the meal market has to send.
Tell me about corn. Let's dig into corn just a little bit. Corn's maybe not dropped quite as much as beans have. I mean, it seems like guys are, I don't know, they're going to shift everything to corn, but maybe a little profit in there or no?
I think corn's probably stuck price-wise. When cost of production would be, I think, corn's core pillar of support. So if the market's goal, let's say, we've got record amounts of corn today, we need less of it next year, it's easier for the market to solve that problem, maybe at $4.10 Chicago corn.
Right.
The producer's losing money, they're going to plant something else. So it's been easier to solve that problem. And also, the market, I think, is balanced for now, given we're finding so much interest from traditional buyers, but places like South Korea, Japan, Mexico are seemingly taking the entirety of our surplus. At least that's the picture for the last 3 months. Does it last is another question, but we found enough export demand. Ethanol use is fine. And so that end users and importers.
So you think that's going to be a little bit more stable as well on price-wise? We're not going to see a dip of $1 or something like that?
I don't think there's a dollar of downside risk unless we revisit next year's balance sheet. We've got a yield of 188 or something like that.
So, I mean, we all listen to the news and bean producers saying, hey, I'm going to go out of business next year. And we hear guys losing money. Boy, but when I drive across Iowa, there's a lot of nice green tractors out there, and they made a lot of money for a few years there. Is there still money in the checking account to float those guys if they lose a little bit more money for another year or two?
It's interesting. It's certainly less money, and I think this is not so much of a crisis yet, but things are getting very, very tight. What we have thought it's interesting is fertilizer is not an appealing price, but the change in the last year in terms of production costs has been machinery.
Right.
And so I guess the question we've got is, I don't know if that makes it easier to manage a little bit. Don't buy the new tractor. Or is that a solution to this, kind of a Band-Aid, in addition to maybe some bridge farmer payments from the USDA?
Yeah, I mean, you look at used tractor sales. There's a lot available. A lot of people are not buying new equipment. There's a pinch on the equipment side. I'm not sure that was coming. I mean, that was coming because there was a lot of new equipment that was bought over the years. So I do wonder about that. But what does land prices play into that? I mean, we haven't seen a decrease in land prices. If you look at Iowa, these local land sales, and you're going, they're just as high as they ever were. So how does that play into that?
I think two things. One, I do think there's kind of a stagnation in land values forthcoming. And we've seen that in looking at Illinois, Indiana, Iowa farmland values and cash receipts from corn production. And so that is going to be probably flat for the next year. So I do think it's going to be difficult to raise rent. And we've seen kind of a plateauing when it happens. So I think that is forthcoming. The second thing, though, is, and this is very basic, we're not getting any new dirt created. And so the supply and demand for land.
It seems like outside investors they're buying land. People outside of our ag world. Will that continue?
I think so. It's a decent asset historically through bull and bear runs. The return is, on average, something like 8%. So I think that probably stays the case when you think about the next decade.
It's always interesting to me. Is there a new market that we're not thinking about? I often think about Africa. We look toward China and India and going, how come we don't look at that big old piece of land in the middle there with, is it 700 million or 500 million or something like that? Is there more opportunity for us there?
I think there is, but we've said this now for 20 or 30 years, and it just hasn't happened.
Yeah.
There's two opportunities. One, I think there's a production opportunity in Africa, so maybe not for the U.S. farmer. But demand-wise, I think there is growth. Sub-Saharan Africa is a big part of it, but
is there anywhere in Africa where you could just see, they're going to start growing beans or they're going to start putting dairies in? We've all heard of the one in Algeria, I believe. They wanted to put up a big dairy. Will that happen, some of those things?
I think ultimately yes, but again, it's been a long time and the organization is just not there. We've seen things like portable, solar-powered water operation systems. So you can get, the ingredients exist for some pretty big growth in Africa, but we just haven't seen it play out. And I don't think we're any closer today than we were 5 or 10 years ago.
So let's summarize. We got milk prices. We're not sure what's going to push it the other way. Beans, probably going to stay on the lower side, and corn may be stable as well. But the milk is for our dairy producers. But what's going to kick that milk price up is going to be the big question.
Yeah, that's correct. And so I think the answer is we've got to produce less than we are now.
Yeah, there's not many other answers to that. Well, Ben, thank you for your time. We really appreciate the insight and looking forward to talking to you a different day. Thank you.
Yeah, my pleasure.
You just heard from Ben Buckner of AgResource Company and GPS Dairy Consultant Paul Dyk here on the GPS DairyCast. I'm your host, Peggy Coffeen from the Up Level Dairy Podcast, and we look forward to joining us again here on the GPS DairyCast.
The GPS DairyCast features conversations that deliver on the GPS Dairy Consulting promise to inspire change and grow leaders. If this GPS DairyCast has you looking for more ways to become an elite dairy producer, find more information in our show notes on how you can add a GPS advisor to your team.